Numbers this morning are looking pretty reasonable with adjusted headline earnings a share up 20%, maiden dividend of 151 cents a share. Of course, this was pretty much expected following recent guidance from the group. So what should the market make of these results? Well, joining me with his view is Chiluba Mumbi from Independent Telecoms and Strategic Advisors, BM Inc. Chiluba, thanks very much for coming into the studio today. Not bad growth coming through from a subscriber level, it looks like, and also on the profit level. What did you make of the numbers?
I think the numbers are actually very impressive compared to the finals last year, far much more impressive than expectations in my view.
How do you think they've achieved this then?
Two big points, takeaways in my view. Nigeria, they are consolidating their stronghold in Nigeria, so they're now about 51% of market share in a three major market. That's the first thing. The second one, I think, which is actually equally surprising and very strong performance, is Iran. If you remember, Iran has got one key feature. There's a revenue share at the top. 28% of the revenue effect goes to the government before you meet any other costs. But they managed to raise EBITDA margin on that asset to about just over 40%, which is quite amazing.
Well, just looking at that subscriber growth here in South Africa, 6.4%, taking it to 17.1 million subscribers. It says it's now grown its market share to 36%. And you talked about Nigeria, 51% market share, and it's got 35 million subscribers in Nigeria. What's the potential to grow numbers from this base? And of course, we know that the South African market's looking pretty saturated.
Mm-hmm. South Africa, very little opportunity, basically. I think if you remember the Vodacom results, effectively a bit of a technicality, I guess. What they did is disconnected a lot of their subscribers who are not using their phones, what are called dormant subscribers. Effectively, I think in our view, probably moving from an accounting basis that is more in sync with Vodafone, so reducing the period within which you have to use a phone to be an active subscriber. So they seem to have lost subscribers, but I think much more of a technicality. But regardless of that, I think it's surprising if MTN is picking up net adds in South Africa because the market is saturated, over 100% penetration. Telecom is obviously planning to launch its fourth mobile. Cell seems to be doing a better job. So net, very little opportunity for growth in South Africa. Nigeria, Iran, very different case. I think still a lot of growth coming out of there because the market does not have as well penetrated.
And of course, any growth that it did achieve in South Africa came in the face of RICA. That's the legislation that means you have to register for yourself, and it particularly affects pay-as-you-go customers. So that's pretty good. Do you see this affecting it going forward, particularly looking at the Nigerian market where they have similar legislation coming in?
Much more of a technicality. I don't think RICA per se stops people using their phones, if you will. On the postpaid side, I guess most people would have gone through this process. And there is enough of a window, I think, to allow that. Ultimately, if somebody can afford a phone, they'll make sure they're RICA and then they can use a phone. If you start looking at the tourism, etc., like the World Cup, for example, is specific, I don't think anyone who wanted to use a phone couldn't because of RICA. It's an admin headache, obviously. I think it's not a small headache, but regardless, I think it's something that can be managed.
And of course now it's declared a dividend of 151 cents a share. It did say recently it was shifting its strategy slightly. It's had a number of failed acquisitions, so it did say it was going to start returning money to shareholders. But it does say in the commentary in today's results that growth aspirations can be accommodated within the imperative of improved short-term returns to shareholders. How should we be reading that? Are we only getting dividends in the short term until it can find something to buy?
My view is it's very difficult to get dividends once you put a certain dividend policy in place. And remember, they mentioned quite an aggressive dividend policy, 40% payout, which is quite aggressive in my view. And then this also sinks in what Vodacom is doing. If you remember, Vodacom have also declared a very handsome dividend. Telecom equally, but Telecom much more of a special dividend from the disposal of the interest in Vodacom. But regardless, I think all this is saying is most of the mobile operators, telcos, are moving to a maturity stage where actually there is not a lot of opportunities, I think, to expand inorganically. Therefore, the best thing to do is retain cash to shareholders. Well, once you've got that in place, and I'm sure you remember Anglo, it's quite difficult to claw back.
Yeah, so and you do get punished.
Exactly. So I think going forward, I think M&A, in my view, is much less of an important strategy for MTN going forward, and they recognize through the dividend.
The size of the dividend, 151 cents, is that what you were expecting from MTN?
It's 40% payout ratio they're aiming for by the end, which is quite aggressive from where they start. It's not an inaugural dividend. They paid dividends before, but far much lower level than this. So this is not the first time they paid a dividend, but regardless, quite high dividend. I think that's recognizing that there are few opportunities on the M&A side, and really don't expect, I can't see anything on the horizon. I think that comes through.
Because they talk about free cash flow up 164% to 6.8 billion rand, and so lots of cash going through this operation. It also talks about ongoing investment into data solutions, the focus on the 3G rollout. And of course, this is really going to replace the kind of saturated subscriber markets in South Africa, isn't it?
Yeah, I think if you look at growth in South Africa, in specific, I guess you got to distinguish between the basic voice and the rest of the service offering. Clearly, I think data is the way to go in this marketplace, and that's a reflection perhaps about the data capability of the fixed line. We should be taking up much more of that slack by the 3G operators, if you will, when you're talking about data picking up the slack that is not provided by telecom. So there is growth, but there is growth in segments rather than growth per se, if you will. I think that's one thing. On the cash front, I think you mentioned huge cash power, and clearly you got to either do something with it or retain it to shareholders. I think that's one side of the coin. The other side of the coin, though, to remember, if you look at the segmented results in a bit more detail, there is quite a lot of cash actually sitting at the key subsidiaries. Now that really is talking about a question of how do you upstream cash from subsidiaries up to group and get it back to shareholders. There is always issues in this marketplace of trapped cash. So that's a problem I think they sort of hinted at, but clearly that's an issue. You shouldn't be having a lot of cash sitting at the subsidiaries, it should be at the top.
The rand obviously having a big impact on MTN. Revenue down 2.2%, but in constant currency terms, it would have been 13% higher. And of course, I think this is just something you have to deal with when you are dealing with the rand, don't you?
If you've got a big portfolio, currency volatility is par for the course. I don't think it's something they'll get away from. It's either goes one direction or the other, but never necessarily beneficial. It is the nature of the beast. If we're talking about currency volatility, then you're talking about what should their footprint looks like, which market should they be in, including the current footprint. But that's a discussion, strategic discussion about whether they should be disposing of assets. Now they are not longer acquiring, very different debate, and perhaps that debate will arise in due course.
What would some of your concerns with MTN be, if you have any?
I genuinely think these results were very impressive, in my view. It doesn't detract from the fact that there are some big strategic issues to deal with going forward. Sudan is conspicuous by the lack of mention, I think, in the results. A question was asked, but Sudan is clearly not doing very well. Now, if you look at the Bharti stroke Zain situation, Sudan was one of the carve-outs that Bharti did not sell on to Zain, which means they like Sudan, and Sudan is doing very well. Low tariffs, but they're making lots of money in that marketplace. Clearly, MTN is not, and they've been in that marketplace since the Investcom acquisition. So clearly, not everything is working quite as well as it should. That needs a fix. Syria, there is one issue with Syria, which is a build, operate, and transfer type model. They need to resolve that licensing issue. That's quite a big issue. Iran, the revenue share, I don't think that's going out in a hurry, but there's a strategic issue about whether there's pressure on them to IPO that business on a standalone basis. I think our understanding is MTN doesn't want to dilute, but well, it doesn't really matter. I think you can IPO a minority stake. I not necessarily agree that's a sensible way to look at it. IPO a minority stake, you still remain a minority by significant control. So that debate will run. And of course, there are some of the non-performing assets. I think we mentioned Sudan as specific. Do you then restructure the portfolio and recognize that most of the value is South Africa, Nigeria, Iran, Syria? That's pretty much, and well, then you start getting the second tier, Ghana, Uganda, but then you're talking about perhaps a footprint of 8 to 9 assets rather than 23.